Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick. Surprise, surprise, it's a slow day out there. I guess that's what you'd expect. On a half day, markets close at 1. Well, stock markets close at 1. Bond markets close at 2. So it's a quiet day today. We'll talk Boeing from yesterday. We'll talk Tesla. We'll talk the only real interesting after hours news yesterday involved WCC and ACST. So we'll talk about the news from both of those stocks yesterday after the bell. Two guests today, one at 8:35, one at 9. Our 8:35 guest, Gordon Johnson. He's always a favorite. We'll, of course, talk Tesla with him. And then at 9, we'll be joined by Gene Munster. We'll talk tech with Gene. In the meantime, Joel, what is the word here overnight?
Quiet range overnight. We're trading up 2 handles. 39.29 and a quarter. That all-time closing high from yesterday, 27 and a quarter. Your pre-market low was just below that, 32.26. So very tight range. On the upside, one number on the upside, 32.34 and a quarter. That was Monday's Globex high, all-time high. That's a level, if we get there, is the only resistance we have in the market. We have crude in the green here by 23 cents. I just took a look at the gold chart on your dailies. Boom, 61.40 was the high of the move, flanked by a 61.20 high. So there's the key to getting into that 62 handle. Gold's just creeping up near the end of the year, up 460 at 1493.30. You have silver doing the same, up 13.6 cents at 1763.5. Bitcoin finding a home in 7,000 handle, down $45 at 7,365. Triple D, man, you must have been busy after hours last night.
That was one of the slowest after hours I think I have ever seen. There was absolutely nothing going on. I was reaching to try to find trades. I found a couple, and we'll get into those in a second. First, I just want to give a shout out to the coin collector in the YouTube chat.
This is the first one.
Yeah, streaming. He says he's streaming from 35,000 feet. So he's flying somewhere, he or she. We don't know if the coin collector is a he or a she, but the coin collector streaming the show live right now on their airline, streaming from 35,000 feet. So we're even in the skies, Joel. We're everywhere.
The airlines don't stop, and we don't stop.
We don't stop either. Yeah, we don't even take breaks on Christmas Eve. Non-stop pre-market prep action coming at you. So out of all this action that we've had overnight, where do you want to start? Spencer's like, I have no idea where, because there's no news.
Oh, was that directed at me? Okay, well,
yeah, you lead the show.
You're the producer.
Okay, so
you're
the producer.
Here, yeah.
All right, well, let's start with this Wesco thing from yesterday.
Weird.
Dennis, you were trying to explain this to us on the pre-market show. I mean, I don't quite understand it myself. I might need another explanation. But
Okay.
So explain what happened here after hours with WCC and AXE.
Okay, AXE has been getting taken over by Clayton, Dublier, and Rice. We'll call them CDNR because that's what they call in the press release. Last night at 5:09, they increased the offer for AXE. And the reason behind this, you had to really dig down. So they ended up increasing it, I believe, $3. So the cash component of it, because I think it went from 80, I'm trying to grab it from the press release too, 82.50 up to 86. So they raised it $3.50. So naturally, that's why AXE is trading higher. Full disclosure, I am long a little bit of AXE. And that's just from the overnight trade because they raised the price. But the interesting part here is in this press release, way down, you have to, this is where the news algos, they don't read the press releases. If you dig down into it, you find out the reason that they're raising it is that they are actually made an offer to WCC as well. So in the press release, it says, and this is the line about, it's in paragraph 1, 2, 3, 4. So the algos would have had to read all the way down to here, and they don't read them.
Yeah,
so it's human beings that are making the money on WCC last night. So it says, we have been advised by CDNR that it has made a fully financed proposal to Wesco to acquire all of the outstanding shares of Wesco, and that the board of directors of Wesco has determined that the proposal does not form a basis for discussions this time. So they made an offer. The CDNR also made an offer for WCC. So you got this like triangle going on here. WCC is involved with AXE, and AXE and CDNR is taking over AXE. Now CDNR might be taking over WCC. So all we know is that CDNR made an offer for WCC, and WCC apparently said they're not interested. That is why WCC is trading up 5 points here this morning, because they're all of a sudden potentially in play. But there was no headline press release showing that. You had to actually dig down. So if you look at the tape from last night on on WCC, it took almost 2 minutes for the stock to start trading higher on this news. And there was a lot of stock that went, 56.10, and a pile went at 57. So the human beings who were reading that press release last night are now up significantly, because the stock's trading at $60.75 here this morning. So humans beating the algos on this one.
So just to confirm again, so CDNR, they're taking over AXE.
That's been known. You can see even the chart of AXE. You can see that was back from like October.
They announced yesterday that they had raised their offer for AXE. And in that same release, buried in there, they also said, by the way, we made an offer for WCC.
Yes.
Although it wasn't, the release didn't come from them. It came from.
That is all correct.
Came from AXE, but AXE is the one describing these events. This time.
Yes.
Okay, so the firm
from the AXE press release.
Right, the firm that was
so interesting.
AXE, raised their acquisition price yesterday, and also said, by the way, we were trying to acquire.
Sniffing around in this other company that was sniffing around, and it's kind of, like I said, a love triangle going on here with the WCC, AXE, and CDNR. But if you were in the press release, so if you're wondering why WCC is trading up here this morning, I'm sure there's been maybe some, I don't know, there's probably been some articles published on this now. People have figured it out, but it took a little while to figure this out. I mean, with this WCC thing, because there was no press release, it was in the AXE buried in there. So I saw WCC trading up last night, and I knew that they had mentioned that in that AXE press release, because I had just leafed through it. And I was like, I'm digging and I'm reading, I'm trying to understand this. I was like, oh, I get it. This stock had an offer. They made an offer for it, buried in that press release. Algos had no idea, because like I said, it took over 2 minutes. So the algos were not on this. Algos are not on trades 2 minutes later. They're on trades 2 milliseconds later. So it's the human beings that actually took the time to read the press release that made the money on this. And there was a lot of stock, Joel. If you look at WCC, a pile trade of $57. So there was a lot of maybe some people, not knowing what obviously was happening, and other people who the informed traders who actually read the press release were like, take the 57, take the 57s. I realized this much after this. This was 5 minutes that I realized after.
Sometimes you tell me.
And then I was like, oh, I'll bid 58. I was like, oh, I'll bid up some of those too, but it was already too late. So I wish I would have read the press release right off the hop.
Yeah, because sometimes you tell me that there's something there, and then you do it, and then it doesn't move, and then you're thinking, oh man, maybe I'm reading.
Maybe I'm wrong.
Yeah, maybe you're wrong or something. But
it's always interesting. Just digging down.
That's doing your homework, pal. That's and obviously someone else did. I'm still confused at the story, but
it's confusing. So basically, bottom line, you don't have to worry about all that. It's just that WCC had a bid put on the table, and it looks like the board rejected it. That's kind of what I read into it. So, sometimes these bids, though, come back, and they come back with a better price, and then the board will eventually agree, because a lot of times board's just positioning too. Maybe they want to sell. We don't know. We don't know what the board is thinking. We just know what we read from that one paragraph in that press release, and that's why the stock is trading up $5.
That is
the reason we're covering this so much is because this was one of the only interesting stories from last
night. What else can we talk about? You want to talk about?
Well, we got to recap what happened yesterday with Tesla, because we are now officially over the 420 takeout price. Haha. Elon Musk even tweeting out the stock is so high. Oh, that was funny too.
Yes, but Dennis, what was actually? I didn't actually look at the close, but okay, here we go. What was the high yesterday, Dennis? I'm bad. It got above it. Never mind.
I texted him when it went to 420.
Yeah,
420.40.42. Yeah, I texted him.
What a joke.
It was funny.
What a joke.
It's not funny for shorts though. And this stock goes up every single day. I mean, we had a little pullback there. It's still, I'm going to keep saying, people want to keep shorting this. We said this 3 days ago. Let it stop making new highs. It makes a new high every single day. It's making a new high again today. I don't short rocket ships. This is the definition of a rocket ship. Is it overvalued? I don't know. It's, how do you even value the thing? So all we know is they're squeezing the hell out of the shorts. The thing's still trying to go higher. Here we were. Is the run overdone? Yeah, December 5th, it was 327. Now we're 427. If you're buying it now, you are way, way late to the party.
How do you know?
Is there going to be a 20-point down day in this coming sometime? Yeah, but where? You gotta wait till it stops going up, in my opinion, before I even sniff trying to short this thing.
I'm not even going to try and short it. I lost a lunch to Jeremy, and that was probably my cheapest way to play it. But breaking out, I don't know how many up days it's had in a row. I mean, maybe wait for a double top, but I mean, at this point, shorting it, joining the crowd. Let's see what happens. Keep an eye. The old time closing high price is what I'd keep an eye on. Where we closed yesterday, we closed at 419.22 with a 422.01 high. Trading above that right now, so I'd say you hold 44.22, continued upside under that, maybe a little back and fill down to the close at 419.22.
Some people just asking, going back to just quickly the WCC thing. In your pro, so this was out at 509, this AXE WCC thing. In your pro, make sure you check. So if you go into your sources,
You know what?
and Spencer, I don't know if you want to show how to do this, but we have a lot of pro subscribers that listen to the show. In your pro, you have to have press releases checked.
So
I mean, this is so much important information comes from the press releases. It's one of the values of the pro, that it gets it all in one place. So you go into sources, you check press releases, then you will see it.
Yeah. So wait. So here's how I would do it. So I'm on the main
show.
This is like the main pro.
Yeah.
Page.
Show it.
So I would do 2 different news feeds. Okay. You can do.
Yeah.
You can do up to 4 widgets per page. Okay. I would do 2 news feeds. I would do one. I would have my sources be Benzinga Signals and Benzinga Wire. Okay. On the other one, I would have my sources be press releases and SEC filings.
Yeah, I agree.
And I would keep them separate because there are way too many press releases and SEC filings to make sense of. Okay, so you got your Benzinga news on your left, your filings and your PRs on your right. Okay, and you can just search for, and you can use that as your news tracker. Okay, so WCC in Benzinga versus WCC in your filings and PRs. There's way more stuff on the right, as there should be, because that's
every press release that's coming from every company
and filings, right? So
and filings too, SEC filings. So maybe you want to, the SEC filings get out of hand sometimes. There are so many of those coming. So sometimes maybe you just want the press releases coming in.
So
you've got to check those to see the stuff.
For what we're talking about, it was a PR yesterday. It was from AXE. That's who.
It's right there. Click it. You can show what we're talking about. I read right from this.
So the part that Dennis read was in here is buried like 4 paragraphs down. But this is what.
And then you can see other stock and start talking about Wesco, and that's interesting. Wesco's trading higher, and there you go.
Right.
And that's the reason.
So I would. So you definitely need to have your PRs and your SEC filings up. I would keep them separate from your Benzinga news, because there is just so much that you won't make sense of. It'll be impossible to make sense of. There's just too much stuff otherwise. So that's how I would do it if it was me. It's just my preference. You can also do a entirely different workspace.
And what I like to do too, Spencer, is you see a stock moving all of a sudden, you search in pro, you don't see anything. Well, go search under the PRs. You can go search in there too. And then you're like, oh, there it is. So, like last night, we start seeing WCC trade higher. So go do a search for just WCC right now in the press releases. Just type WCC and boom, there it is. So, or AXE, sorry. Well, you can see AXE. It was AXE that was moving because it was buried in there. That's why all the news, everybody missed that one last night. But it was under AXE. So,
I would do
we're teaching you how to use the pro here this morning. But the key is you need those press releases. I mean, I use the press releases, and there's a lot of them. Even when you're a company. So here's the Benzinga news team is great. They'll break down and tell you the numbers in an earnings release. The earnings release typically first hits the board as a press release. So, you know, the company hears the numbers. Now you have the Benzinga news team that will interpret that and give you, you know, the nuts and bolts in their own, you know, but you know, that can take a few seconds for them to get the nuts and bolts. So, but the PR typically hits first, the press release on your earnings.
So here's an example. We'll just go back to last week and we'll do Costco just because it was relatively recent. Okay.
Sure.
So Costco had earnings on Thursday, right? So if you look on, I scrolled it back to Thursday here. This is on my Benzinga news on my left. We've got it was out of 415. Okay. So
415.10.
Okay. So here.
So the Benzinga news team has went into that report, read it, and then published the headlines to give you the nuts and bolts.
Headlines at 416, 420, 426. They're
giving you all the important information.
Okay? That's all there. That's for you, so you don't have to read it. If you want to read it, boom, there it is. 415.10 Thursday. Costco wholesale reports first quarter earnings. It's all there. Right.
That's when it hits the board for everybody. And that's when the news, that's why you see, oh, the stock's trading already. Well, the news algos can quickly read those headline numbers. They can pull that out in 2 microseconds.
Exactly.
So, you know, that's the difference. Obviously, you know, when you want to publish and get the meats and nuts and bolts from it, then you've got to actually, you know, read it and bring it, and then we write the story on it. That's why it's often, you know, a few seconds later.
Right.
And the Benzinga news team is fast, but if you want it right off the press, it's the PR. It is all in there in the pro.
Yep. So
I read these PRs. Like, you know, I do a lot of reading. I'm actually, I think I'm turned into a speed reader here because, like I've said, you know, I do a lot of, you know, inefficiency trading, and I consider myself to, you know, be a news trader as well. And I'm specialized in news interpretation. So I want to go in there and find stuff like that, where, you know, there's an inefficiency here. They're raising it. Oh, this WCC thing, the news algos aren't on that because it was buried in there, so they don't even know what's going on. So as a human being, there might be a trade. I was slow on that one last night because I saw it trading up afterwards. So I didn't get that one, but I did buy some AXE last night on it. I was actually able to get that right off of the thing. Only a couple hundred shares because that's all that was there, but I was able to lift that. And this morning it's already trading up 2 points. So that was, you know, cut and dry. They were raising the price for AXE, so you could see that was probably going to go higher. This WCC thing was kind of buried. So the news interpretation traders who were all over that, congratulations, you beat me on that one, because that was impressive to find that.
So one more quick thing on this though, if I can go back to the pro here, and you talk about speedy reading and press release here, all the numbers are a different color, so you can just go beeline towards the numbers, right? Beeline towards the green.
And the pro does that for you.
Right. This is in a pro. So right. So like the numbers are what we care about here. In this case, this is from the PR, the WCC AXE thing from last night, right? So your eyes naturally go towards, you know, the green, and that's where the important information is here, right?
Because if you go just to the PR,
just find the green.
And it's such a good point you're making, because if you just go to the regular press release sites, it's not going to be like that for you. So the pro automatically does that for you, colors it. It's, you know, there's an algorithm in there doing that for you, so you can quickly extract the important information.
And like nobody cares about this quote, right? Like we don't care about this quote. Okay, so just find the green. Exactly, just find the green. That's the
numbers are usually what's important.
That's my
exactly
right. Find the numbers.
We're teaching you how to trade the news.
It
can be done. Believe it or not.
You did get some comments that was very helpful.
I'm glad.
So, Benzinga Pro, look at this. We're pitching our own products. We never pitch anything on this show. Like, we're pitching our own products.
The only other news, I guess you could say, from yesterday.
Are we missing somebody at 8:15?
No. Gordo's
8:35 is Gordo.
Yeah. Oh, I forgot. Okay,
yep. So the only other news I wanted to discuss besides Tesla and the WCC thing, and we'll get to Boeing in a bit, but this ACST thing from yesterday is very interesting.
Talk to me about this, because I'm not following this story at all.
Acasti Pharma. So they were supposed to release phase 3. Was it trial data. They had top line results from a drug trial supposed to be released yesterday. The stock was halted. Time passed. Data didn't come. Okay, no releases from the company. Stock was halted from 1 o'clock yesterday, and it hasn't resumed since. At 8:30 last night, the company came out with a PR. They basically said, you're gonna have to wait another month. You're gonna have to wait till late January 2020 for these results. So the results were due yesterday. They never came.
Delaying the results.
No update from the company as to why until 7 hours later at 8:30 p.m. when they said, this is not coming today. you wait a month. So the stock has been halted since yesterday at 121. I think.
And do we know? Do we have a projected time where it's going to reopen yet, or not yet?
126, excuse me. No, I don't know no, I don't have an answer.
If you want to know, and sometimes the pro will republish this information too, but we're teaching you lots of stuff here this morning. Go to NASDAQ halts, Google NASDAQ halts. It'll tell you every single stock that is currently halted, and you can get on there and it'll have the projected. So ACST was halted yesterday. If you go to NASDAQ halts right now, the current trading halts, there's like 7 of them on there. ACST halted at 1325.55 yesterday, like Spencer was saying. Reason code is T1, so that's going to be news. And then the resumption time and resumption quote date time are still blank. So they haven't given you, this hasn't been published yet, when they're planning on to resume the time, the quote time. Typically the resumption quote time starts 5 minutes before the trade time. So they haven't put the projected reopening of this yet. But that's where if you're ever in a halted stock, Google NASDAQ halts. First link, boom, NASDAQtrader.com, and you'll see the trading halts. It's an education Friday on how to, or education day here on Tuesday.
Might as well be Friday at this point.
It feels like Friday because tomorrow we're off.
Let's talk about Boeing here.
Sure.
Obviously, I guess I was right. As soon as we ended the show, the news was out there at we ended the show at like 9:00.
We were trying to delay it to get that news. It came like a minute after we.
We ended the show. That was what most people were predicting. The CEO is out.
Yeah.
So let's talk about.
And also, we predicted on the show that the stock would rally significantly if the CEO was out, and that is exactly what happened. It reopened low, and they reopened that fast because it reopened 9:15. Like they reopened it really fast. I wasn't even ready for that. I was like, I was gonna put an open order in there, and I'm like, oh my goodness, it's already open. And then it was 3:30, 3:32, 3:34. I was like, oh, I missed it. So I was doing other things. They reopened that at 9:15, like literally 10 minutes after they halted, or 15 minutes, really quick. So anyway, I missed it because they were just opening too fast. I wasn't ready for it, but I wanted to rebuy that open, and I probably would have got long at 3:30 if I would have realized it was opening that quickly. But I was doing other things. I got sidetracked. I have a lot of positions in the morning, and I just never got back to Boeing to put the order in there. And anyways, it opened at 3:30 and then straight up in the pre-market where that is. So you could have made some money on Boeing. Joel, you're silent in the background. Are you still alive?
Yeah, no, I'm here.
We lost him, I think.
No, I just
the defibrillator. Oh no, he is there. Okay.
I was looking at the trading hours, and someone asked me about it. The SPOOs will stay open until 1:45 or 13:45, right? So that's 1:45. That seems like a weird time. And
what was that for real? Why is they doing that time?
Because the
this is why I don't trade the SPOOs anymore. It's too annoying.
Oh,
we open, we close. Oh, we'll close for 45 minutes in the middle of the after hours session because we got to have our reset and rest on those quotes. Let the quotes rest for 45 minutes. That's all silliness. Anyways, so all you equity traders need to know is that we close at 1 o'clock on the stocks, and after hours close at 5. That's what you need to know. If you're trading after hours, open till 5.
Okay.
At 5, everything's closed. At 5, it's like shut down everything. So SPOOs close 1:45.
Yeah, that's what it says.
When do they reopen? Do they trade on Christmas?
No, they don't. They're not going to reopen at 6. I think they're going to reopen at 6 on Wednesday
in the morning.
No, it's 6 at night. I think. I don't know if there's going to be any trading.
Well, Christmas is Wednesday, so
Christmas is Wednesday. So normally Thursday session would start at 6 p.m. on Wednesday night, and I'm just trying to see here if they're going to do that or they're going to. I don't know when else they would open it, but definitely is going to be. There'll be no trading tomorrow. I think until
26 is a full day though.
Yeah.
Yeah, so the back in the saddle, 26 is just normal, full day action. You get 1 day off here. And then, so it's half day today, full day off tomorrow. And then New Year's closes. New Year's full day though, right?
Yeah.
And then and then obviously the first off. So, okay, so there's your holiday hours. We got that all straightened out.
For me, I was talking about the Boeing, and it's out of there. It's, it's away from the support here. I think it's really going to be important to see if it gets back up to the upper end of the trading range. If this is such good news, I don't know. I just still
340 is big.
Yeah.
Yep. Yesterday's high 340.58. You can see, so if you just go out to your deal, it kind of jumps out at you because he had all those lows back in October after it breached back in October, and we made the big low down 324. Then we got back up. We got it back up over 340, and the 340 became like just this huge support level where we kept bouncing off of it. And then we eventually came back down. We bounced off the first time, then took it out. Now we're getting back there. So the old support becomes new resistance trick. Does come into play here. So I will say Joel's number is very important as well. You want to see this get back up above 340.58. But pullbacks are going to get bought in here too. So I think, and I said this before, I think the Boeing low is in. I said this 2 days after. So I said this on the day.
You did. Good call.
Yeah. Actually, I even on that day, I was like, this 320 is huge. If we can bounce off that, I said that Boeing on that bad news could potentially close green. I didn't make any money on it, but I called it pretty well. And obviously, we've been up since then. So I still think the Boeing low is in. I still think you're going to see buyers on pullbacks here, especially since the CEO is out now. Some of the stuff maybe gets put behind us. Obviously, the cash flows are still a concern with this plane offline here. If the plane ever comes back, though, stock could get a huge pop, but we don't know when that's going to happen. That could be a long ways out. So cash flows are going to hurt here for a while. But with that being said, I do think that the 320 low is in. I mean, if it goes eventually takes it out, I'm wrong. But I think the 320 low is in.
My only advice here is the stock has a long way to zero. So if you're going to buy this thing, have an out somewhere.
320. And this is great. And we don't give advice on the show, but if we ever did, the advice that we get is stay disciplined. That's what we can say overall is the disciplined trader is how you stay in the game. When you buy a stock on a support level and it takes it out and you were buying it just because of that support level, that means your initial reasoning for getting in the stock is now gone and there's no reason for you to stay in that position. You can put on any trade as long as you have an out. Do not let a trade become an investment. We see it again and again and again. People
even if it's an investment, it's an investment, have an out somewhere, right?
Have it out. Exactly. And you know what? I do this wrong in my investment portfolio is that, even myself, is that I don't typically have the outs on the investment portfolio. I like long term. I try to forget about it. I'll let it do its thing. The one thing I do right though is, and this is where everybody does it wrong, is on their investment portfolio is they sell their winners and they hold on to their losers until they come back. And eventually what happens inevitably is your portfolio will be full of losers and it will just, because even if 9 out of 10 of them come back, well, the one that doesn't will start to erode your capital. And then you get hit with another one eventually and another one. And eventually you're just full of losers and your money and your capital just starts to deteriorate. And that is how you lose almost guaranteed in the stock market, by selling your winners and holding on to your losers. In my long-term portfolio, I hold on to my winners and my losers. That's how I have a stock like MasterCard that I bought at $16, and I've talked about this one before. It's 297 because I've held on. So if you're going to hold stocks to zero, you better be holding stocks when they're up at 100, 200, 300% too, because that'll make up for it. But, and that's the only way you can just do the whole fully Warren Buffett approach. But typically when the story changes and the story breaks, I will take my losers and get out. There is some that I'm still with, but, for the most part, I like to try to cut my losers even in my investment portfolio. But as trades, I have zero tolerance for losers. I eat those right away. My day trading portfolio goes flat every single day. Typically, unless I have a swing trade on, which is the odd one I do, but pretty much, overnight, and I typically, I get out of all my trades. Usually I trade the open, and then I usually take the middle of the day off. I'm usually out by 10:30, 11 o'clock. I'm usually flat on all of my day trades, and then obviously I trade the close, trade after hours, and I reposition, and then, that's how I trade. But if I have a loser that, all of a sudden news went against me on something, I eat it. Right away, I was like, okay, well, there's nothing I can do. I'm down 4 points in that. I only want to lose $1. Too bad. I lost 4. Move on. Got to eat the losses.
Dennis, did you read this article in the Journal on Friday about the Voya Corporate Leaders Trust? They have not made a significant change to their portfolio since 1935.
That's crazy.
They bought some stocks in the 30s and the 20s, and they're
probably worth a lot of money.
Yeah, well, I mean, not all of them are still around, right?
Well, Polaroid, and at a certain point in time, you got to lock in some profits, because if you stick with companies long enough, sometimes they boom and bust, right? So,
Right. So, they don't hold any tech, obviously. They haven't made a change in 86 years, but they own like Berkshire, basically. They own a lot of Berkshire type companies, but that's what you need to do. You buy and hold for 86 years.
yeah. Well, I don't know if I have 86 years here left, but I do intend. There's been some stocks that I've held. GE was one that I held for a long time. I had GE. I bought GE back in 2001, and I held it for like 15 years. Terrible when you think about it. And at the end of the day, I ended up losing on it. So, and people say, oh, well, you got all the dividends, and I wasn't doing dividend reinvestments, which is, sometimes an argument, why maybe you don't reinvest your dividends, because in the case of GE, I probably took out more in dividends than I actually put into the stock in those 15 years. If I was doing full dividend reinvestment, I would be losing for sure on it because the stock was traded higher for so many years. But, eventually, and I've forward in my portfolio for years too. I eventually just sold both those out because I think the stories are broken. So, and, so you move on. So they're not all good ones. MasterCard was a great one. GE and Ford were terrible.
Hey, let's just take a quick look at Frank in the chat. FedEx, look at that. 3 lows in at the same area here, Dennis. You willing to go out and say?
Well, Yana won't know why it pumped yesterday, and I don't think we got to this on the show, but I actually did buy FedEx for a trade overnight. Why? An insider buy. Those insider buys when the stocks are in the gutter matter, and nobody was giving that love. It wasn't a big buy, but you had a director, and if we go into the pro and to the SEC releases, you can see this. John Edwardson, who's a director, bought 10,000 shares in the open market at 148.22. He went and did that. Well, it would have been, obviously in the last 3 days because the stock was down there. So in it pops 3 points yesterday. I think that was the catalyst because it started popping after that was released, that information. So those director buys, and sometimes director buys don't matter at all. CEO buys are always kind of noted, but director buys aren't noted as much, especially when they're not that big. But when a stock's in the gutter and it's been beat up, and obviously FedEx beat up, and all of a sudden you get a vote of confidence from a director, that can help the stock. And that is why the stock was up 3 points yesterday, in my opinion.
And no other. And 3 bottoms in the same area. Now you're getting into the gap area. Your gap. Oh boy, a bunch of setups.
It is downgraded today though.
So
let's not get too excited.
152.77. That was your high on the earnings day. Hit 152.76 yesterday. You are getting a downgrade, but that's an important level. That beginning again, I want to be downgrading it here. What if it gets in that gap? There's a nice gap to fill.
I believe it's Argus downgrading
up
today.
To 161.02.
That is correct. It is Argus.
So,
Argus downgraded the stock here today. So don't get too excited here. It already got downgraded, but I think there's underneath demand here now. 146. You do have that nice triple bottom in place there. So I think you're fine. Buy. This is one. Sometimes we fade the analysts. I would fade the. I'm still long in the long term account, but this gets down at 148. I might put it on for a trade again too, and then stopping myself out at the 146.24 low. Again, as a trade, you got to set up. Where's my out? Where's my out? Out clearly defined here. You have the triple bottom that we're looking at, 3 lows in a row there. So you have a nice out there. So you're buying at 148. Well, you're risking yourself $2. And if it takes that out, well, the low of the move obviously wasn't in.
I want to get 2 things in here. We'll stick on the insider buys and sells here. I believe it's Travis Kalanick. He's down to 10% only in his position in Uber. He sold 90% of his holdings.
Is that right? When did they do that?
He's been doing that for a while.
Dumping.
Yeah. Yep. He's cashing
Not a believer.
No, he's not a believer.
Market don't seem to care.
Yeah, it's just kind of
stocks coming back.
31 looks huge in this. The last 2 highs. Rob was asking about Starbucks, and this thing it's getting ready to do something here. I wish I had a crystal ball to tell you what it's going to do, but look at the trading range here from 87.5 up to 89. That's been your range basically for 1, 2, 3, 4, 5, 6, 7, 8 sessions in a row. So I don't know, expensive to do the options. I don't know. To me, it kind of looks like it's hit it. It's rallied as much as it can, hit resistance. Looks like it's getting ready to go back down. But trade the range there.
Consolidation station.
Yeah, yep. Trade the bottom of the breakdown or the breakout. So that's what I'm looking at. It ain't gonna stay here forever. And look at this. He had 3 closes right around 88.40. Decision time in Starbucks. So we'll see what happens today and the rest of the week.
I'll be in Chicago next week. I am going to that new like 4-story Starbucks. I will report back as to how.
Oh, you're going to Monday and Tuesday, right?
Right.
Okay.
Right. So I will report back as to how this new fancy dancy Starbucks is and how many shares of Starbucks I've bought in the interim. It is 8:35.
Yeah.
We are waiting for Gordon to join us here. So while we wait for Gordon, there were a few ratings since we.
Well, I wanted to talk Disney just before you go to the ratings.
Oh,
Sure.
Disney. Okay.
I saw the movie last night.
How was it?
the movie.
The movie stuff, Rise of Skywalker. You know what? Okay, so the movie reviews, and I've been following this along, were terrible. And, obviously the stock was down 2 points yesterday because even the numbers were disappointing over the weekend. Even though they're crazy numbers, it was disappointing. So my expectations were very low going into this because obviously the reviews are coming. Were not good, and the stock getting the beats yesterday because the movie didn't get as many people seeing it as they had hoped.
Yep.
So I had very low expectations going in. I thought it was okay. I wasn't like, wow, that was a good movie. Like Rogue One, when I saw that, I was like, man, that was a good movie. This was okay. It was like, I think my lower expectations helped. I think if I had high expectations going into it, I would have been disappointed, but I had low expectations going in. So I was like, it was okay. It brought back some cool characters. I'm not going to give anything away, but all I'm going to say is it got to the point now where it's unbelievable. I mean, Star Wars was never believable, the Force moving stuff around, but now the Force is just out of hand. It's like, it's just too ridiculous. So in my opinion, they've taken it too far. That's all.
Star Wars jumped the shark when they made sound in space. We all know there's no sound in space, right, Joel?
That's a good point too.
No,
It's something we
I-
don't
Joel,
think about.
There's no sound in space.
There is no sound in space. There's no medium to carry the sound.
What was there?
You can yell at the top of your lungs from outer space, Joel. Like me, if you want to silence me, send me to outer space. I just want to see my lips move
You'll
around.
find a way to talk in outer space.
Put him on a
Yeah.
SpaceX
Wait,
or whatever.
There was Star Wars 1 and then Star Wars 2 and then The Empire Strikes Back. Is that how it went?
No, Empire is 2.
Empire's 2?
Yeah.
I think that's the
Star
last.
Wars, and then
And
Empire
maybe I
Strikes Back. and
saw
Return of the
Star
Jedi.
Wars for sure, and I saw The Empire Strikes Back, and then
Star Wars: A New Hope.
and then I haven't seen any of them since then. I don't like those movies.
That's okay. You're allowed not to like
I'm
them.
the only one.
You are the only one.
You're not the only one. I promise.
Brent, you like Star Wars? Yeah.
Oh
you like
yes, he
Star Wars?
does.
Okay.
Not the only one.
Yeah.
Are you? Spencer's gonna go see this movie.
Of course he is.
eventually,
Oh yeah, he's
yeah.
a movie guy.
The Mandalorian, though, I'll tell you, that's good. So if you got Disney Plus, or if you have access to whatever how to watch the Mandalorian, it's 7 episodes in now. That's good. I like this Mandalorian thing. So like and the 8th episode I believe comes out on Friday. Man, it's good.
Have not gone around to that yet.
Like that's flat out good. So reviews are good, and go in there, and Mandalorian is good. Baby Yoda.
All right. Well, that's enough of the Star Wars talk. Let's bring on our guest. Our first.
I like the Star Wars talk.
Yeah,
Okay.
yeah, I know. But let's bring on our first guest today, Gordon Johnson. He's the founder of GLJ Research. Gordon, good morning.
Good morning. Thanks for having me on the show.
Thanks for making time for us today, Gordon. We'll get to Tesla, but I want to start off with Aurora Cannabis here. You came out last week. I think it was last week. I believe it was last week, with a rather bearish outlook on Aurora Cannabis. You said it is worth $0. I believe that was Canadian. And then yesterday, they announced that the CCO, Cam Batley, has resigned. So ACB and the stock did not react well to that headline. Outline for us the bearish thesis here, Gordon, on Aurora Cannabis.
Yeah, and one other thing I'd add, not just did Cam resign, but Director Jason Dyke sold 57% of his holdings recently. I think that also had something to do with the downside yesterday. But look, here's the reality. And I like the management there, at least the IR guys who spoke to us initially. But I think the reality is, there's a number of key things that I think are problematic for Aurora. Number one is in the revolver they have with BMO. Recently, they added covenants to that revolver. One of the covenants is the debt to EBITDA ratio has to be below 4 times by September of 2020. There's there are 2 other covenants in that revolver, but But basically, what that does is it turns on the ticker, if you will, the time clock, if you will, with respect to Aurora having to get to profitability. And we don't think they're going to get to profitability. And I think a lot of people are looking at 2.0 products. And if you guys remember on the Q3 call that Aurora did, they projected that, you're going to have 40 new stores opening per month in Ontario. And they thought that you're going to have as much as 480 additional stores open in Ontario in 2020. The reality, however, is the Ontario government has come out and said they're only going to open 20 new stores per month and probably get to a total of 180 stores. And when you add to that a number of the provinces like Quebec and Nova Scotia are significantly limiting edibles, and some of them are basically forbidding vaping products, we think the 2.0 rollout is going to be much less robust. In fact, we think it's going to be more of a headwind than a tailwind because we think the sales are going to disappoint. So the point is, as Aurora's numbers continue to disappoint, keep in mind, these guys, their share count is over the past, I think, 3 years has went from 100 million to 1 billion. They're perpetual diluters of their equity holders. They have a lot of debt due, and they have these, very restrictive covenants that effectively would allow, if they so choose, BMO to take over the company if they're not profitable by September of next year, which our model suggests they won't be. So it's not just that, clearly, you have a ton of inventory. Cannabis companies are being forced to buy back product. I'm not stating this wrong. You're hearing this correct. Every single sale that a Canadian pot company has made to a province effectively can be forced back to them. I don't think people are aware of that. Canopy has had product forced back to them, and just recently it was revealed that Hexo has had product forced back to them with 29 months of inventory right now in the Canadian pot market. We think this is going to be a bigger problem in 2020. We think it gets a lot worse before it gets better. And, we think that, the debt holders are effectively going to end up owning this company. So that's why we think the equity has very little value, no value, rather.
Hey, Gordon. Dennis Dick, I just want to take it into some other stocks in the sector. I'm not sure which ones you cover here specifically, but if you're giving kind of a bearish outlook for Canada altogether, so you look at, Kronos and Canopy Growth and Afria, there's just a ton of these stocks out there. Are you looking, that these are, do you think more downside for these as well?
Yeah, we cover Tilray. We also cover Tilray. We have a $4 Canadian price target, so we think there's significant downside left there. The benefit that Tilray has is Privateer is a big holder. Keep in mind, Privateer just sold, I think, roughly 13% of their holdings. But I think that overall, it's just, again, you can't overstate this. I mean, there's 29 months of inventory based on Health Canada data as of the most recent filing. Health Canada data is somewhat delayed. That's as of September. 29 months of inventory. That's over 2 years of inventory that, if not one additional sale was made, the market would have sufficient supply, if you will. And keep in mind, again, I cannot overstate this either. Every single province right now, and keep in mind, cannabis is a perishable product. It does have a due date, if you will, an expiration date. These guys, every single Canadian province, if they so deem, can force back product to these companies, and you're starting to see it happen. Hexo announced it in their calendar third quarter. They said basically the way they positioned it was, well, we had to buy back product last quarter too, but we brought back less product this quarter. They didn't reveal that in the quarter prior. But with 29 months of inventory, with a market that we think is going to be oversupplied, we think that tangible demand is around probably 500,000 to 1 million kilograms, whereas you have supply of just the publicly traded companies of roughly 2.5 million kilograms. And when you add in the non-publicly traded guys as well as the black market, you're probably talking about 3.5 million kilograms of supply. So you're talking about a market that is structurally oversupplied 3.5 times with 29 months of inventory. I mean, I've never, and this is a pure commodity product. It's something that, a college kid can grow in their dorm room. Things don't get better before they get worse. And one of the key things that I think a lot of people have gotten confused on in the cannabis space is, for instance, the same thing for Tilray, but Aurora says they're in 25 countries across 5 continents, right? A year ago, that number was 15 countries across, I think, 4 continents or 3 continents. And if you look at their international sales over that time frame, they went from 3.9 million to 5.5 million, or just 6.6% of total. The point is that's an extremely misleading statistic that essentially all these companies provide. And everybody's assuming, hey, these companies are going to grow internationally. The problem is when they say they're in like a country like Mexico, they're serving 3 guys in a medical study. So the point is you can't sell recreational cannabis outside of Canada by law. And these medical studies are very, small. When I say small, I'm talking about you're looking at like 10 patients in a hospital who are using, Aurora's cannabis's, product, and they're counting that as a country they're in. So, these investors think, well, my God, they're expanding into all these different countries, but the reality is much more grim. So I think that a lot of that reality really starts to hit home this year. Clearly, it's hit home this year in 2019. I meant to say next year in 2020 when the 2.0 products disappoint and, these guys continue to have to tap the capital markets to stay in business. I mean, it's the same thing for Tilray, but if you look at Aurora, their G&A expense alone was more than their entire gross profit in the most recent quarter. That is a recipe for disaster.
All right, let's move on away from the cannabis names into another name that you're bearish. Tesla, which we've talked about this stock every day on the show for the past 2 weeks here, won't stop going up. Has your view changed at all here?
No, I mean, I'm a fundamental analyst. What a stock does not change my view. It's extremely painful. The stock is completely decoupled from reality. But Tesla now has an enterprise value greater than Ford and GM combined. And these are companies that produce the same amount of cars Tesla does annually in a matter of days. I could give you 50 reasons why the equity is worth significantly less than $50. But the stock doesn't care about any of them right now. And it's not just Tesla. I think if you look at any highly shorted stock right now, some of the stocks we cover that are highly shorted are just, up every day. And I think that we're kind of in a 1999 like internet stock bubble all over again. In fact, it's not just the internet stocks; it's every stock. And I think that's being driven by, billions of dollars that the Federal Reserve is pumping into the market on a weekly basis. If you look at the Fed's balance sheet and the stock market, they're nearly perfectly correlated. I think Tesla has big problems next year. And when I say big problems, they're benefiting now from a U.S. tax credit that goes away, in a few days. January 1, 2020. There's no longer any incentive to buy a Tesla car from the U.S. government. In addition to that, if you look at what's happening in the Netherlands for Tesla, sales there are very strong right now because January 1st, 2020, the tax benefit you get there from buying an electric car becomes less robust. So this is what you call demand pooling, but still I think their numbers are not going to be, extremely robust. Initially their guidance, I think, was 360 to 400,000 cars for the full year. I think they're going to be at the low end of that. I think they're going to be above the 360, which they need to do, I think, 104, basically 105,000 cars. I think they're going to be above that. So I think they'll be slightly above the low end of their guidance. But I think things really get bad for them next year. I mean, there's so many questions with this company, right? I mean, you have the funding secured comment by Elon Musk. He picked this arbitrary 420 number, which he admitted was, basically a weed joke. And now it's, everybody's giving Tesla credit for being at 420, even though, essentially it was admitted that it was a joke. So but you have that. You have the Solar City acquisition and litigation that, you're going to hear a lot more about next year. You have real competition from the likes of the Volvo Polestar, the Mercedes EQC, the Jaguar I-Pace and the Audi e-tron are doing quite well. The Porsche Taycan. The point is you have real competition coming in 2020, not just in European markets, but also in U.S. markets. You have, yep.
So Gordon,
no, go ahead.
In the long term, you may end up being right. I don't know. But in the short term, how do you advise your clients to short this stock or to bet against stock in any way. You can't. It doesn't.
Yeah, I mean, when you say you can't,
I mean, you can.
I'm sorry. Go ahead.
Yeah, I get technically you can, but I mean, it doesn't stop going up. I mean, it's like you said, it's incredibly painful.
Yeah.
It's not just Gordon though. There's a lot of
painful.
Yeah, but there's been so many people, on the street. And I think Gordon makes some excellent arguments here on, from a fundamental basis. And I don't think you're coming out and telling everybody to short the hell out of it. You're just saying don't own it, sell it, because you think eventually.
Yeah, I mean, we're not pounding the table to short. We're not pounding the table to short the stock here, but I think the equity value of Tesla is in the $40 range, and I mean, you get moments like this in the stock market where stocks go up. But, if you're looking at a stock that, Tesla has, people talk about this company like it's a startup. They've been around for 10 years. They lost money every single year. Thus far this year, they're close to $1 billion in losses. And we think they'll continue to lose money every single year. I mean, to say you can't short it, I mean, I guess you could take that standpoint, but that's just not our viewpoint. We look at the fundamentals of the company. In the third quarter, there were a lot of things they did that we think were, it wasn't fundamental to the story. Their revenues were down year over year. The first time ever their revenues have fallen year over year. So you're talking about a company who's being, valued as a high growth, essentially exponential growth story where, you have revenues now declining year over year. And, they may eke out a profit in the fourth quarter, but I think once we get into 1Q, they're going to go back into deep, deep losses because they're not going to have this benefit of, one-time demand pull-in for a U.S. tax credit that's going away and a Norwegian tax credit that's becoming less beneficial. So, yeah, I mean, the stock is doing things that we didn't think it was going to do. Are we wrong right now? Yeah, absolutely, we're wrong. But, we think, when you say long term, I don't know what type of time frame you're talking about, but for us, I think that as you get into next year, I think it becomes very difficult for Tesla because you don't have, the benefit of, demand pull in markets. In Q3, what they did is effectively, we believe, they went out to essentially all of the suppliers for the Model Y. The Model Y is effectively 75% of the same parts of the Model 3. And they asked them for all the rebates up front so they could recognize all those rebates in Q3 instead of over time. And that benefited them significantly on the gross margin line. So there's a number of things they're doing that, it's easy to overlook if you want to be bullish. And, I mean, it's kind of crazy. I saw today that BMW is being investigated by the SEC for aggressive sales practices. Saying their cars can do things for, in full self-driving that they can't. And, it's like, Tesla's saying things like this every day, it seems like. But that's besides the point. I think that, look, our view on Tesla has always been the same. It was that competition would come in and hurt them. And if you look at fundamentally, if you talk about, a company where you've had multiple executive departures, you have sales that turn negative in Q3 for the first time ever. And you have U.S. sales that are now trending down, right? This is their most mature market. U.S. sales that are trending down on a monthly basis, 30 to 50% year over year. If I told you that at the beginning of the year, you'd probably think Tesla stock would be down, and it's not. So it's dislocated from fundamentals, but eventually it will get back to that. This is an auto OEM, not a technology company. So I think that the higher it goes, the more advantageous you can look at it as a short.
One more for you. U.S. Steel here got hit. Had the guidance cut. Just got to give us your outlook for U.S. Steel, symbol X in 2020.
Yeah, so U.S. Steel, I think they have big problems. And, what we mean by that is, so let's just look at the numbers, right? So they cut their guidance clearly. They pull back their dividend. They said that's going to save them about, I think, $25 million. And they cut their CapEx next year by $75 million. So total savings of $100 million, right? But here's the problem. Due to effectively unemployment and employee benefit costs, the calculation for each worker that effectively they're basically firing at Great Lake Works, it's about $100,000 per worker. That's the cost. So 1,500 workers, that's $150 million annualized in cost. So already, you have more expense than cost benefit. But you also have to add to that, when AK Steel idled Ashland Works in 2017, and I think it was a 3Q, the 2017 10K, they said the cost was about $2 million per month to idle Ashland Works. And if you look at, Ashland Works capacity, 2.2 million tons, Great Lake Works, 3.8 million tons, that's another 41 million. So total expenses to do the move that basically to basically idle Ashland Works, 191 million versus the benefit of 100 million. So already you're looking at a dilutive dynamic for U.S. Steel. I don't think people are fully aware of that dynamic. People are just looking at the guidance cut. I think this is going to be dilutive for them. That's number one. Number two, right? We know that Nucor and Steel Dynamics, took down their net income numbers, and the stocks, took a modest hit for 4Q. But X is guiding to negative, 25 million in EBITDA, and that's before the 225 million in restructuring and other charges, quote unquote, that they're going to take. So my point is, our problem with U.S. Steel all along has always been the same. They're the high cost guy, or among the one of the high cost guys. So and that's just being proven in 4Q, right? 4Q of this year, they're guiding to negative 25 million in EBITDA, whereas the electric arc furnace guys are guiding to basically a positive net income. So you got to look at over the past decade, essentially, U.S. Steel has done a number of things, to include Carnegie Way, asset revitalization, technology investments, and most recently the investment in Big River. Basically the EAF mill they're looking to purchase. And it seems like, based on this most recent announcement, none of that has been successful. I think you really have to question, their execution on this ever evolving, operational strategy of theirs. And you also really have to question, their viability as a going concern, given this move they're making. Again, this move, based on our calculation, creates 191 million in costs and only 100 million in benefits. So this is a dilutive move, into a market where, they're not going to be able to benefit from having this Great Lakes Works facility up. So, I think that U.S. Steel, at today's prices clearly is structurally loss making. And when you think of things, some of the dynamics out there, like we look at demand, two key demand drivers for steel being auto demand and residential demand. Automotive production is decidedly negative right now, and non-resi construction spend is decidedly negative right now. And then when you think of all the incremental supply that's coming online because of the Trump tariff benefits, it's just you have an oversupplied market and a vendor who is structurally loss-making at these prices. And we think prices are going to go lower from here. So we think things get a lot worse for U.S. Steel before they get better.
Gordon, before I let you go here, is there any stock that you do like next year? I want to end this interview on a high note here. Anything you do like for 2020?
We're working on a sector that we like. Clearly, we can't say it right now, but we'll have something for you guys, hopefully in early 2020. We think it's a structural long that's going to work in a big way. But again, can't say it right now. Right. Of the stocks we cover, I think the one that we think is the best positioned is First Solar. It's the only neutral rating we have. We think First Solar does well due to the contracts they've locked in through the end of basically 2021. So that would be the only one we officially cover. But we are working on something we think is very exciting that we're going to, that will give you guys some ammunition on the long side.
All right, Gordon Johnson is the founder of GLJ Research. Gordon, have a great rest of your year. Happy New Year, happy holidays, Merry Christmas. We'll talk to you again in 2020.
Same to you. Take care.
All right.
Thanks, Gordon.
All right.
Thanks, Gordon.
8:59 here. We are going to bring on our next guest in a minute here, but guys, in between that and this, any thoughts on that or any other final thoughts for the day?
It's holiday trade. It's going to be quite obviously we have the 1 o'clock close, so don't get surprised and be long and start like, whoa, we're close. So remember the early close, and balances are fairly small. Again, holiday trade. GE though always there, never leaving. 300,000 to sell this morning in General Electric, like clockwork. I cannot believe that's been going on. It feels like for years. Johnson and Johnson 30,000 to sell. Bristol Myers 40,000 to sell. Those kind of stand out a little bit from an opening and balance perspective. CRM stands out 43,000 to sell in Salesforce.com. So keep an eye on that one there. Interesting, just the CRM. You have a lot of stocks making new highs. CRM is still struggling right at the area it was in November. So I'm not sure if it's failing there, but you need to get up over that 165 in a hurry. Otherwise, it might be failing. What are you thinking, Joel?
Just 34 and a quarter is a target on the upside. And if we take out that pre-market low, the highest low we ever made, that came in yesterday at 24 and a quarter.
All right, let's bring on our next guest, Gene Munster. He is a managing partner and founding member at Loup Ventures. Dennis, I don't know if you're going to hang out or not. But
hang on and say hi to Gene for a bit.
Hang out. Gene, good morning.
Morning.
How are we doing this morning?
Doing fantastic. Thanks for having me on, guys.
Appreciate you coming on. So I don't know how much of that last interview you were able to hear, if any, but I believe you cover, not cover, but look at Tesla. Is your view as bearish or close to it as $40 price target?
I guess it is representative. No is the answer. I think that this has measurable upside. It's hard to put a price target on a company that really doesn't make a lot of money. This is a similar problem that Amazon's had for a long time, as we all know. But I think that, so I did not hear most of the previous interview. What is my takeaway just from that comment is that despite the move in the stock, there is still this very divided group on Tesla. My goal is not to be in the fanboy group and think that this will go up into infinity, but be in the level-headed group that recognizes that there is an undeniable truth around electrification of vehicles. Tesla maintained their 75% market share in 2019. We had made a prediction that they would have greater than 50% share, and that prediction, this is a year ago, we made this prediction. That prediction was viewed as being overly optimistic for Tesla because there is going to be 7 new entrants into the U.S. EV market. My point is this, is that building electric cars is not the same as building a typical car. This is a computer on wheels, a different manufacturing process, different tools, different expertise. You think about what's going on the self-driving piece. So I think that it is, yes, it is true. I think most people would agree that the future of automotive is electrification. But I think that there is this head start that Tesla has that is going to continue to move the stock higher. The big lever here around the short cover is probably 3/4 off the table. My guess is the short position is probably now down to about 10%. It was at one time 23%. But I do think that the stock goes higher.
So is are we back to being a car company? I mean, there was at one point when, it was saying, well, it's more than a car company. It's a computer company. All the information from big in the car. So is it back being a car company now?
Well, I was saying that this is not a car company. This is it's manufacturing. But there's an undeniable truth that it plays into. That the future of automotive is electrification. So I think that that future of electrification is going to change kind of how we define what a car is. I know that sounds like I'm a fanboy here, but whether it's Tesla or someone else, how the car, just like the PC is very different today. It's been broken down into the smartphone and a portable, a laptop and a wearable, a watch. The same is going to happen in the car.
All right, and I've talked about this before with you. I just see less cars on the road eventually, with self-driving cars, and I know it's going to be a future. So, I mean, is the promise going to be, more of these cars are going to be Tesla than the other cars, or because I just see, just in 5-10 years, though, overall production of cars is going to be way down. And are they going to benefit from, is everyone going to be driving these expensive Teslas?
I agree that the population growth, but that's pretty modest. Sure. But yep. Maybe to say that the number of cars are down slightly or flattish, that makes sense. So globally, it's call it 90 million cars sold a year. Tesla will do 350,000 cars this year. Think about BMW, that's 2.5 million, just as a point of reference. The biggest car companies like Toyota, for example, might have 15%, 15% share, something like that. To answer your questions, I think that the over number of cars is flat to down over time because people are just going to get more utilization. They thought of car ownership as going to be less important because there's going to be less friction in hailing a ride. Number one. And number two is that ultimately you're going to have somebody like Tesla that might have, it's not going to be 75% market share, but there may be a world where they get 20% market share. And that's going to be, we're talking about 20 million vehicles versus 350,000 today.
Okay. All right. So let's move on. I believe your stock of the year, your pick of the year for 2019 was Apple, correct?
That's correct.
And here we are. It's what I believe is getting up close to 80% of the year. Is it beat your expectations as far? I know you don't have specific price targets here. I know when we talked at the FinTech Awards, I don't even want to throw out that number you gave me there is where you thought your possible price target, but talk about why you liked it in 19. Is it going to, how can it perform in 19 or 20 like it did in 19? Talk to us what's going to drive Apple in 2020.
So I think this idea of a consumer staples tech company should garner a higher multiple. So ultimately, I think that the stock can go higher. I think it's $350 or a $400 stock. I didn't answer your first question. I set out at the beginning of the year thinking this would be a $350 plus stock, but thought that was over a couple years.
Okay.
I think it's closed more of that gap in 2019, but I still feel, so now we're at if I thought of that as a kind of a 2-year window, that 350 to 400 range. And I think at the time we were sub 200, something like that. I think that this is, it's probably hard to believe, but I think that that's still a year plus away. But I think that this is still setting up to be a great performer for next year. And to answer your question, how does that happen? There's two factors going on. One is this, like I was talking about, a different view on Apple's multiple. And I think that's happening. I think investors are slowly viewing this as just a steady growth, slow growth, returns a lot of capital to investors. There is always been this belief that Apple should trade at a lower multiple versus its peers because it's hardware based. And that is rooted in the view that hardware companies are more hit driven, that their businesses can evaporate in the future. And of course, the textbook examples are BlackBerry and Nokia. And so that was more than 10 years ago, but it was a very painful exercise for investors. What I think will happen is that this view, and I'll call that view that hardware is insufficient, that it's somehow suboptimal type of a business. I'll call that a flat earther view. And the reason is that if you look at the numbers over the last decade, actually the hardware combination with software, services, all of that Apple's been doing has driven more GAAP income per year than FANG combined, the rest of FANG combined. And so if the true measure of investing is GAAP income, then I think that investors will slowly view this as a comparable multiple. So let's give it a comparable multiple to Facebook. Google is a little bit lower, I'd call it 28 times this year, Facebook 31, and then of course you have Netflix and Amazon that are higher. But if you give it a Facebook multiple, that's $371. And I think that's realistic.
All right. So that was your thoughts on Apple and your stock of 2019, Gene. What about your stock of 2020? Have you figured that one out yet?
Yeah, we're going to say more, but I think it's a lot of the same that we saw in 2019. I think you're going to, like we were just talking about with Apple there. I mean, I think that is a realistic view about how 2020 plays out. I think with another one, I think this what's going on in Tesla, I continue to believe that will move higher, and based on, in part because I think that the number of deliveries will continue to rise quarter on quarter. On the flip side, on things that are a little bit more challenged, I've been negative on Netflix. I've been wrong. I believe that more competition is going to yield slower sub growth. And we're not going to see that in the December quarter. The company's been kind of making some hints that that's not going to happen, that things are going to be fine. So when I think about stocks that may not do as well, I think about a company like Netflix actually may do pretty well in 2020. But then as soon as consumers need to really pay for these other streaming services, so when Apple goes from free to pay in 2021, Disney maybe raises its prices, that's when things get more difficult, because just like Prime Video never really was much of a competitor in terms of Netflix. I think that because it was free, people just got it for free. There's no reason to turn off something that you're paying for when you're getting something else for free. I see that as one in 2021 that becomes a headwind. But you're asking about 2020. So I think surprisingly, actually, maybe Netflix is more in a better place than a negative place, which is a different view than I've had.
Let's move on here. Let's just talk the other big guns here. What we talked to you a month or so ago. Amazon just kind of hanging out here, ignoring the rest of the market, not going up to new all-time highs. Boy, is that going to happen soon, or is this just the way Amazon's going to trade here in 2020?
I think Amazon's a great company. Technically, I'm not a technician, but I frequently talk to technicians. It feels like it's at a point where it should do better technically. But to answer your question from a fundamental standpoint, I think that the fundamentals will be good enough to keep it here where it is or moving higher. But I think there's better performance in other companies.
All right. And then Google changes at the head of the company. Wall Street seemed to like that. Just bumping up here against all-time highs. Any thoughts on Google?
Google's a great story to own longer term. Put it in a similar camp to Amazon, in that I think your money's better placed in other companies like Apple or Tesla.
Okay. And do you follow Square at all? As that popped in the chat, SQ?
I follow, but not enough to be smart about it.
Okay. All right. What about this stock? I believe it's LTHM. We've discussed that a few times on the show. I guess they're kind of the lithium Livent Corp. That's the name of it. Are they tied to Tesla as far as the success for batteries? Stock's starting to show some life here after a rough IPO in late 2018 and early 19.
Yeah, I do think that this is one to own if you have a view that share my view that electrification is the future of automotive. It's an arms supplier to the arms race. And I think what is surprisingly encouraging is the company actually slightly missed its output expectations when they reported their recent quarter a couple weeks ago. Stock traded down 5%, and then they kind of just bounced right back up. I think there is a lot of lumpiness in terms of how order flows are going between different lithium suppliers, and was encouraged that despite that negative news, that the stock rebounded. I think that to me is an indication that expectations are low, and ultimately this company still is in front of that wave that we've talked about. And so bottom line is I'm still a believer. It's a small company, but if you're looking for a small cap way to play the future of transportation, I think Livent Corp, ticker LTHM, is a great place to be.
All right. What about, do you follow Roku?
I do not.
Okay. All right. That we just got a question about that. Is there anything, I mean, I've asked you about the big guns. Is there anything you don't like? Is there any?
I'll give you, there's one that I would mention too, and this is if for your, we've never talked about this one. I covered e-commerce in China for a long time, and then in Latin America with Mercado Libre, and have kind of done this emerging markets e-commerce. So this I would put as worth doing more work on.
Okay.
On the long side, but it's a small company. It's a $480 million market cap. It's Jume Technologies. The ticker is JMIA. That's Juliet Mike Indigo Alpha.
Okay.
And it is the stock has gone. It's been just a IPO for call it since the spring. It's gone from 45 down to 5. I'll say that again. It's gone from $45 down to $5.
Correct.
There's been, but the reason why I put it out there is it's what they do is e-commerce in Africa, and so I know that sounds off base. Like, why would you want to invest in Africa? But it is a company that can, a continent that can be vastly transformed through tech. And I see they're one of the leaders within that. And the reason why the stock is down is there was some seller fraud that was going on that's typical. And we saw it in Latin America. We saw it in China. And they've rationalized some of their spending now, and they've gotten out of a couple smaller markets. But anyway, that would be one that if you just believe in e-commerce longer term, you believe in the continent of Africa. I realize it's way outside the typical strike zone, but it's popped up on my radar.
All right, and I forgot to ask you about Facebook. I think you turned during our monthly chat. Kind of turned a little bit towards the bullish side here in Facebook. You talked about the Libra. Just give your outlook for Facebook in 2020.
I think that one is just going to continue to inch higher. And as you mentioned, that was one I have turned my view on. I'm not a believer in what good Facebook and Instagram bring to the world. I think the world is better without it. But I need to set aside my personal views and think about what this means to advertisers. And their reach and the ability to target is unprecedented. And advertisers just don't have a lot of places to go that can give them what Facebook can give them. There's only one other place, which is Google. And so I think as long as that reality is in place, I think the company is going to continue to be successful.
All right, Gene Munster, founding partner at Loup Ventures. Gene, thank you so much for the time today. Have a great rest of your year. Merry Christmas, Happy New Year, all that jazz. We'll talk to you in 2020.
Thank you. Bye.
Thanks, Gene. I'll talk to you soon.
All right, and that will be it for our show today. We'll obviously be off tomorrow, although it is Christmas, so maybe Joel and I will hop on. Joel?
Yeah.
No? Okay, we won't. So we'll be back with you on Thursday. I want to thank both our guests today, Gene Munster and Gordon Johnson. Thanks to everybody in our chat. Please remember, all the information from our show meant to be used as informational purposes only and not for investing or trading advice. You can always catch our podcast or rewatch our show on youtube.com/Benzinga TV. Everyone have a great rest of your day. Merry Christmas to all. And we'll be back on Thursday.